Welcome back. It's time now to take a look at the top business stories. Abu Dhabi International Airport records over 12% growth in passenger traffic in 2010. Union Railway to allocate civil engineering contracts in March. And we speak to Marwan Shurab from Gulf MENA Alternative Investments about the upcoming reporting season. The GCC markets ended mixed today and the UAE bourses ended down. The DFM was down 0.3% to close at 1,604 points on the first day of the trading week. The banking sector posted losses today as Dubai Islamic Bank fell nearly 0.5% and Emirates Airlines lost nearly 1.75%. Ema Properties fell over 0.25%. DU fell 0.3%. Air Arabia rose 2.5% and DP World rose by 0.3%. 52 million shares were traded, valued at 74 million dirhams. And over in the capital, the ADX lost marginally by 0.04% to close at 2,682 points. The property sector witnessed losses today as Alder Properties fell again 1.5%, while Suru Real Estate fell over 0.5%. Abu Dhabi Islamic Bank also rose over 0.5% and Abu Dhabi Commercial Bank gained 1.5%. Taka fell nearly 0.75%. Etisalat dropped 0.5%. 47 million shares were traded, valued at 92 million dirhams. Passenger traffic through Abu Dhabi International Airport grew by 12.2% in 2010 compared to the same period a year earlier. The Abu Dhabi Airports Company released its performance report for last year, showing that nearly 11 million passengers passed through the airport last year. Aircraft numbers increased by 10% and air cargo recorded a 16% growth rate. The ADAC witnessed the introduction of 5 new international airlines, 6 new destinations, and added 41 different frequencies from its existing airlines. Experts say these figures reflect the strong economic growth rate the Emirate is experiencing, and the company is now looking to attract new airlines as well as encouraging existing airlines to expand their service. Union Railway will allocate civil engineering contracts for the UAE's first railway network in March. The first phase of the network is set to start mid-2011, which will cover 270 kilometers of the Shahabshan-Ruwais area, with construction comprising of earthworks, track laying, railway bridges and signaling systems. The next 2 phases will see the development of the Abu Dhabi-Dubai link and then onto the Northern Emirates. Union Railway CEO Richard Boker says the network is critical to enhancing the current freight transport system to drive economic growth in the UAE. The company is currently weighing up the best partner to take up these first steps of development and will be announced in March. Office lease rates in Dubai's central business district fell by 9% in the last quarter of last year, according to a report released by commercial real estate advisor CB Richard Ellis. The property market overview also reveals that lease rates of secondary and tertiary office locations fell by over a third last year. Smaller units showed the greatest decline in rents. During the end of last year, investor activity from individuals and corporations picked up, but still, lease rates have continued to fall. Forecasts from the Dubai Chamber of Commerce show the UAE economy will grow by 4.6% this year and 6% in 2012. This, experts say, will have a positive impact on the country's real estate sector.
Yes, so as I say, we've just released our Q4 market view report. The main findings are, again, downward trends in rental rates. We had a 4% decline for apartments against a 5% decline for villas. As new supply is coming onto the market, we're finding that rents are softening across the board, although the prime locations in Marina and downtown are managing to hold up a bit firmer with the quality of infrastructure and facilities that they offer. In the office sector, we're starting to see some extended decline with office rates in the CBD down 9% actually on the quarter.
And carrying on with the property sector, a recent report shows that house prices in Abu Dhabi and Dubai are recording further double-digit declines as property oversupply weighs on valuations. Dubai prices and rents are already about 60% below their 2008 peak. And that is also affecting neighboring Emirate Sharjah. In recent years, Sharjah has enjoyed a cost advantage over its neighbor, with lower rental costs and house prices making it an ideal option for commuters looking to work in Dubai. But this cost advantage is now starting to weaken. Here to talk about the issue is Landmark CEO Charles Neal. Hi Neal, good to have you on the show today.
Thank you very much for having me on your show.
So what does the decreasing lease and house price rate gap mean for Sharjah's property market?
Well, what happened certainly before 2008, a lot of people went to live in Sharjah because prices were much cheaper, both rentals and to buy apartments. Since then, since the crash happened in the Dubai market, a lot of Sharjah commuters have moved back to Dubai and taken advantage of the lower rents. Now, what we've noticed is that this trend is slowing down. I think the people who wanted to move have done so. And landlords in Sharjah, they're now trying to hold on to their tenants.
Thank you, Neal, for your time. And in our fast financial news, Dubai e-government's e-pay system recorded a 65% increase in payments last year, where 2.5 billion dirhams were collected through e-pay, compared to 1.7 million dirhams in 2009. Dubai Customs, DEWA and the Dubai Municipality were the top three entities to receive the highest amounts. The popular method of payment highlights a significant move towards electronic payments for the region. Continued signs of improved bank lending will help residential property prices to recover this year, according to developer Mimon Investments. As more banks look to increase lending and thereby injecting further liquidity into the mortgage market, property investor sentiment is likely to improve, according to the company. Mimon Investments is looking to deliver residential projects valued at 1.3 billion dirhams this year. A recent survey revealed that banks in the UAE charge the highest interest rate in the region, which range from 2.25 to 2.99%, compared to, for instance, 1.6% in Saudi Arabia and 1.5% in Qatar and Kuwait. The Al-Khalij study also revealed many customers are dissatisfied surrounding their bank services and fees. Coming up, we speak to Marwan Shorab from Gulf MENA Alternative Investments about the upcoming reporting season.